Ladies and gentlemen, Greg Mikulowski with a Forex quick look on take a look at the dollar versus yen. In trading yesterday, the dollar versus yen moved sharply to the downside and in the process got closer to the low price that we saw in last week's trading. That wasn't breached until today, where the price in the early Asian session moved below that level and then extended below this blue line right here. This blue overlaid line is the 100-day moving average coming in at 146.98 currently, and the break below that level should have led to lower levels, and indeed it did. The price moved down to 146.66 before rotating back to the upside. Now looking at the daily chart, the break below that 100-day moving average was significant. Why? Because if you go back to this time right here, the price bounced off of that moving average and led to this rise right here. And if you go back to this low right here, what did the price do? It bounced against the 100-day moving average and led to that rise. So this break below that level should have led to lower levels, I would expect, but it was not meant to be. And as a result, we had to see the sellers turn to buyers on the break back above that 100-day moving average. You can see that on the hourly chart as the price moved above it and then came back down to that 100-day moving average. And although the price moved a little bit below that level right through here, it could not sustain any momentum. It was just a small little token break of that line, kind of test the waters. And instead of finding sellers, we found buyers, and the price moved higher. We did get a comment from Bank of Japan's Adachi, who said that the big policy decisions will have to wait until next year's wage talk, and perhaps that led to a selling of the yen and a buying of the U.S. dollar. Also coming into the New York session, we are seeing overall dollar buying in the markets here. Although yields are lower, they are off their lowest level, so that's somewhat positive for this pair. Now, look, the next target on the top side will look toward the 148 level. If we're able to get above that level represented this low right through here and this low right through here before moving to the upside, and then we came back down to that level in trading yesterday. Found initial support and moved higher before finally breaking below the level. So watch the 148 level just as a level to get above. It's a nice round number, and also it seemed to have attracted some short-term buying over the last week or 2 weeks of trading in this currency pair. So watch that level get above it. It's more bullish. If we find sellers against that level, we could see a rotation back to the downside once again. So there you have it. A look at the dollar versus yen from a technical perspective. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.